Hey guys, welcome to another trade recap video. Today was day one of the Bootcamp recorded day trading. I did have a red day today. I took 7 trades in all, so I'm going to go through each one of those really quickly to show you my stop losses and also the profits on the green trades. I want to also record how I was feeling psychologically on these trades because that is just as important journaling wise as are the trades. This morning was a little bit more stressful knowing that I was going to have to report my trades and also give an explanation for each of my entries. The first trade I took was something that was a little out of my wheelhouse. I was able to stop out of that trade, but again, it caused me to start out the morning red, which added another layer of stress onto the already stressful situation. I'm going to jump through these real quick and go ahead and show you my entries and exits real quick. I hope you guys can appreciate the content and feel free to go along with me. Let's jump over to the chart. Okay, guys, my first trade this morning was on MRN. They had a lot of volatility and volume pre-market, so this was a perfect stock to watch at the open. I attempted to do a trade off of a reversal, basically wait for a candle to make one way make one move to the long side or the short side, and then on the second candle to jump in and follow that momentum. The first candle right here was red, so I took my entry right here for the continuation down. This did continue down a little bit, and I was actually able to take profit right here. Again, this was moving very rapidly. Unfortunately, as this stock came up, I did not have my break-even key hit. Instead of hitting my break-even here, I just took half. If I would have hit my take half and break-even order as this ripped back up, it would have stopped me out here and it would have been fine. As it turns out, I had to manually exit my trade really fast, and that caused me a little bit of slippage, as you can see these fills here, and that put me down red. First trade of the day, first 2 minutes of my boot camp career, and I was already down in the red. So as you can tell, I was a little bit stressed out from that. I knew I could recover, but I just felt like I didn't trade this properly. The proper way to trade this would have been find this range here, which would have been what we were looking at. And then once this shook out, the next candle to move out of this range, either this way or this way, would have been the proper entry. Unfortunately, I jumped in this way too early. I should have waited until it broke out of this range, and then we would have had a perfect, opening range breakout. Unfortunately, I took the wrong entry. That's okay. It was something that I was able to stop out of quickly, even though I hit the wrong hotkey, which is obviously my mistake. But I didn't hesitate and I didn't try to average down. As you can see, if I would have tried to average down into this trade, I would have ended up carrying bags and being on the wrong side of where we're trying to be at. So really quickly, that was my first trade and my first red trade. Let's go on to the next one. Okay, here we are at Apple. I took 3 trades on Apple, and every single one of those trades turned out red. Now, my stop loss was really tight, and on each of these trades, I maybe lost at the most $10 to $15. But the bad thing and the upsetting thing to me was my entries I felt like were correct based off of the levels where I entered, but unfortunately the stock just it traveled in this channel and it stopped me out every time. That was the most frustrating part about this. As you can see here, Apple did make a big move and then bounce back up across VWAP. It had a decent amount of volatility to trade. When I decided to trade Apple, I was trading for the move back down to VWAP, which right here was my entry. Now, as you can see on this candle, it bounced right back up and I stopped out. The line here was about 146.43 and I took about a 10-cent exit. I wasn't going to give, any more than I had to. And it frustrated me on this next because as you can see, the very next candle, we moved down. Now, in hindsight, that trade was a higher high and a higher low. This was not the best place to make a bearish entry. If anything, it would have been bullish, but if the range was so tight, I should have been smarter in the moment and known to just sit back and let it shake out and let these levels kind of spread out a little bit. The second trade, it was the exact same mentality. I saw this pop up, and then as it was coming down, I saw this doji, and we were right at the 9 EMA. I was looking at the price action, and I said, okay, maybe this is the move that is going to take us down back below the VWAP. And again, for the second time on Apple, it did not do that, and it bounced right back up to R1. That was my second stop out. And again, as you can notice, I'll always mention this, but it's very obvious. My stop losses are very tight, and I do not average down. Averaging down is the easiest way to go to max loss on the day in one trade. I refuse to do that. I don't care if I have 5 red trades. I'll have 5 red trades and take small losses than I will averaging into a loss and taking a big green. That is just unacceptable to me at this point. My third trade on Apple, I gave it time this time is to shake out, and it actually went below VWAP. I took the entry, and it lost VWAP. And as you can see, it did move down. I was actually in the green on this trade for this candle and this candle. But from my entry, which was right here, I was at least trying to get a 10 to 15 cent winner. I was trying to get 1R basically, because I had a 10-cent stop and a 10-cent profit would have been 1R, risk on return, or I'm sorry, return on risk. And unfortunately, it just did not hold. Apple refused to stay below the VWAP, and I did not take any profits. I wanted this to move down, and I wanted to, it was either all or nothing on this last trade on Apple. I felt like they had been in this channel for so long, either they were going to go this way, or I was just going to stop out and it was going to leave me. And that's what unfortunately happened. It came down to this level. There was absolutely no corresponding levels to tell me where this was going to bounce. There was nothing back here saying, okay, this stock is going to bounce right here. There was no real big numbers over here, like a flat number or anything. And what we got was a bounce, and it went right up above the VWAP. And again, as soon as I saw that, I was out with another 10-cent area loss. That was 3 stop losses on Apple in a row. These were not consecutive. The trade I'm about to show you, which was my winning trade, came a little bit before this. These were my ending trades, the last one you saw on Apple. So as you can see, I had that many red trades, and I just mentally I feel like I can't productively trade anymore the way I'm supposed to. I knew that I was in a mental state where I should not be trying to make, honest trades. It was more psychological at that point. I could have easily switched around and went the other direction or gotten lucky, but again, that is something that I have to follow, and if I don't force myself to follow that rule, then it's only going to bite me in the future. So that's where we are on Apple. Now we're going to jump over and actually end this video on a good note, the good trades that I did take on Lucid. Okay guys, here's the last stock I traded today. These were 3 trades on LCID, which I did well on yesterday, and I did pretty well today. The reason I did well is because I traded the pattern that I knew how to trade. Unfortunately, after that first trade on MRM, it kind of shook me up and kind of got me off of my base a little bit. I came back to what I knew, and it successfully went through. Unfortunately, the Apple trades didn't go through the way I wanted them to, but this one right here was a little bit more reassuring. So let's jump into that real quick. As you can see here, this was the 935 to 934 entry on VWAP that I like to take. As soon as we had the run up here and we had the double top on Lucid, we want to make sure that it's going to continue down and not bounce. So after this pullback here, we allowed it to go down to the VWAP, and that's where I took my entry. We had a little bit of indecision here. The bulls, they tried to push this back up, but obviously it didn't happen. I will say that I probably took this partial a little bit too early, given the amount of volume that was coming in that was red. I should have held just a little bit longer, but after that first trade, I wanted to go ahead and seal in some profits. I'm going to be 100% honest with you. So I took a profit here and then another profit here. And my last, well, I should say 5 more partials were right around this area here. That's once we lost the 50 EMA, we started bouncing around a little bit, and I said, okay, I'm going to go ahead and take these partials. This was my last partial right here on this one trade, which this was pretty much one trade right here. This is where I was all out. You may ask me why I let it go this low, and it was because the size that I was still holding was comparable. It wasn't a very large size. It was still enough to help my profit margin go up a little bit, but it wasn't enough to where if I would have felt guilty if this would have bounced up. My second trade, as you can see, I'll let this bounce up here and then come back down off of the 9. I wanted to go in for a break of this previous close, which is this white dotted line here. I went on my entry here, and it was exactly at $25 where my entry filled at. And unfortunately, it didn't keep moving lower. It wasn't ready to move lower. It would have been nice. I felt good about the entry, but again, it popped back up, and I had an automatic stop here. Uh, Again, you'll see a lot of times when I stop out, you're going to say, why didn't he just hold? If I would have just held here, if I would have just held here, just held, it moved on down and I would have been green. Well, the reason I didn't just hold is because if you can see, this stock bounced up almost 13 cents from my entry. My R is that level. I don't care if it goes 1 cent above my R, I'm stopping out. That's the only way that I can keep myself in check and keep myself from averaging down into trades. A rookie trader may see this and may say, okay, let me go ahead, and since I have this entry, let me go ahead and hit short again here. That way it'll bring my average here and I can take a little bit less. Well, what happens when you average in here and it keeps going this way? What are you going to average in again? And then it keeps going higher, and you're just going to keep losing more and more money. Do not do that. Please do not do that. I'm not a financial advisor. I do not know what I'm talking about most of the time, but just take my advice. Please do not do that. Take it from somebody that has done that, and it's not a good idea. My last trade, and this is why it's okay to get out, because my next trade, what did I do? I waited for it to rebound, and then it came back down. You can always get back in the trade. Just because you have to stop out doesn't mean the trade is lost forever. You just wait for it to form another pattern that you want to take. It came back down towards the previous close, and I said, okay, here is the low of day at that time. I'm going to go ahead and take another short to see what happens. And if it would have bounced up, then I would have taken another stop loss. Thankfully, this time it actually decided to move on lower, and I took one small partial as it crossed at S1. And then I took the rest of my shares out down here, which was about a 70-cent move there. Or I'm sorry, excuse me, a 30-cent move down to 24.73. So again, guys, that was I tried to blast through everything really quick because I had a lot of trades. And again, I just want to reiterate that always keep in mind psychology is the best thing to keep yourself in check on. You can always wake up tomorrow and make up for a little bit of money that was lost, but if you give back too much of your profits, you're digging yourself out of a bigger hole. It's the equivalent of trying to dig yourself out of a 1-foot hole or a 20-foot hole. At the end of the day, you're going to get too overcome with the amount of stress and pressure that's on you, and you just won't be able to overcome it. That's what I've learned in the past, and that lesson actually helped me today. It kept me from trying to fight back from something that I could just come back tomorrow with a fresh mind and a fresh outlook and make it up then. So that's where we are today. Hope you guys enjoyed this video. Again, I'm always going to be honest with you. Even if it's green or red, I still hope you enjoy the content. Take care, guys.